Okay, it looks like it's filling up now, so we'll go ahead and kick this thing off and we'll keep letting people join as we go. If you guys have any questions today, go ahead and put them in the chat here. My colleague Michaela will also be on the call today and she'll be available to answer questions in the chat as we move along here. Physical inventory is the process of counting and reconciling inventory items to ensure that the inventory on your business's financial records matches the amount of physical inventory available in your store. It's typically the largest balance sheet asset in most companies. Accurate inventory is required to deliver timely and accurate customer service, as well as calculate profitability correctly. Variances are to be expected each time a physical inventory is conducted. Keep in mind, strategic inventory management enables retailers like you to pivot and capitalize. And adjusting quickly is business critical. It's estimated that retailers miss out on $1 trillion in sales each year because they don't have the items customers want in stock. Preparation. Your upfront preparation is going to dictate how smooth your inventory count goes. Doing some basic inventory calculations throughout the year will help you make sure that your inventory management strategy is working for your business. We'll start with inventory turnover rates. Optimal inventory turnover rates are different for each retailer and the types of products they sell. The inventory management capabilities of your point of sale system offer a wealth of information to help you establish and monitor that inventory turnover rate and figure out what works best for your business. An inventory turnover rate is calculated by dividing the cost of the items sold by the average inventory during that time period. As a guideline for most products, a desirable turnover rate is somewhere between 6 and 12. The target for lower fashion retailers typically between 4 and 6, while luxury retailers selling big ticket items usually go for lower targets in the 2 to 3 range. Understanding what inventory is costing you is crucial to creating an inventory management strategy. To calculate the cost of goods sold, add the cost of your inventory at the start of a defined time period to the cost of additional stock added during the time period. Then, at the end of the period, subtract the costs from the ending inventory. Reducing cost of goods sold directly impacts your bottom line. To lower your cost of goods sold, look for small opportunities to purchase larger quantities at discounted prices or qualify for shipping discounts. And always explore alternate supplier options so that you're, paying competitive rates and you know the options available if you decide to make a change. We all know that inventory is a balancing act. You want to have enough so you don't miss out on sales too much, but it's also a financial burden. The key is calculating the right amount of safety stock to cover unexpected delays in receiving new inventory without overstocking. To determine an item's appropriate safety stock amount, multiply its maximum daily usage by the maximum number of days lead time for reordering. Then think about the typical scenario. Multiply the average daily usage by the average reorder lead time. The difference between the two results in an indicator of the safety stock amount you should have on hand for that product. Now, when you're ready to do your physical inventory count, it's important to have a plan before you begin. It's a good idea to schedule your physical inventory count well in advance so you have plenty of time to prepare. Keep in mind, larger businesses may require more than one day to complete the process. And don't forget your staff during this process. We found that it's a good idea to have snacks or drinks available for them to keep them comfortable and focused as they count. Start by mapping out your warehouse or storage areas. This will help you define areas for different counters to focus and it'll help eliminate duplicate counting. This can be as simple or as complex as you need it to be. Mapping out the area can just be you getting a piece of paper, drawing out the store, and then drawing squares in every section where your inventory is, and letting your different counting teams know that that is where they need to be counting. That way no one crosses over into each other's zones. Another thing that's really useful, if you're a larger business, assigning experienced staff as captains or specific groups will help streamline your process. These captains are going to act as a first line of contact and can usually answer the majority of questions. We recommend you use barcode scanners to speed up the process and reduce errors. If you're not using barcoding, assign 2 people as a pair to count specific bin or slot locations. You'll have one person count and the other records the data. It's a good idea to pair seasoned employees with new employees. We have tricoders like this one I'm showing here available to buy or rent for your inventory to help out. A tricoder works like a scanner, but can also let you input how many were counted after recording a SKU. These counts can then be uploaded to a spreadsheet and then imported into POSIM. A mock inventory is a great idea for new employees or if a more formal physical inventory is new to your business. It can make inventory day flow much better. Mock inventory is a good opportunity to show how to use a scanner to anyone who doesn't feel totally comfortable, especially if you're utilizing staff that don't normally work in the warehouse. This is also a great time to talk about teams if you plan on breaking your staff out into teams. If you're leveraging captains, then explain their role and function during the mock inventory as well. All unsellable and damaged products should be removed and disposed of. Holding on to these items will throw off your inventory and your financial numbers. Clearance, sales, special storing, or giving away damaged products are all options for moving damaged products out of your warehouse. Consider the customers that buy from your clearance aisles the most. What do you need to do in order to market these products to them? Return to vendor merchandise should also be cleared from the count areas and labeled RTV or return to vendor, do not count. We also recommend removing all slow-moving bulk inventory before your count. Again, this inventory is stagnant and doesn't accurately reflect the assets of your financial statements. At a later date, you can look into ways to liquidate these assets. Money tied up in inventory is unavailable for other business expenses, so like rent or payroll until the items sell. So getting the not too much, not too little on-hand inventory balances, that's critical for financial planning and forecasting. And solid forecasting is also vital and relies on solid inventory management. So this ensures that you don't end up with a storeroom full of unsold products that have to be sold at a discount at the end of the season. If you ship orders or have open orders for pickup, you should fulfill those orders or keep them open and be sure to include all items that are still on hand. If you're using an e-commerce linker with your point of sale system, you might also want to make sure that any of the orders that are completed on your site aren't being held as open orders in your point of sale system. So this goes without saying, but all normal activities the day of the count need to cease. You can only get an accurate count of your inventory if it's static, both physically and within your point of sale system. We also recommend using a blind count process of SKUs where quantity and dollar value aren't shown to the counters. Count teams may be tempted to speed up the process and not count the inventory 100% accurately. It's also a good idea to have someone from IT around to run down problems that occur that are systems oriented, like device problems, computer problems, communication issues. For small shops, this could be whoever you go to for system issues. Another great option if you don't have dedicated IT, and that's pretty common among small businesses, is leveraging your point of sale support contract when it comes to any questions you may have surrounding your point of sale software. Consider reaching out to the tech support team beforehand and letting them know that you plan to do a physical inventory on this day, and we're hoping to have a contact or someone you could reach out to after your physical inventory is over or while it's being performed to answer any small questions that pop up. If halting business seems like too much of a burden or the overall physical inventory process that we've discussed so far seems overwhelming, consider cycle counting. This means tackling physical inventory on an ongoing, rotating basis by counting specific product categories on a daily or weekly schedule. The ongoing approach typically takes fewer resources and it reduces disruption to your operations. So now that the counting is finished, what's next? After counts are processed and compared to the system inventory on hand, you need to calculate the inventory shrinkage. Calculate inventory shrinkage by comparing the system's on-hand inventories to your count by SKU. You can find out if you have too much inventory in stock, which probably means you're tying up too much capital, but out-of-stock situations send customers to your competitors. The reality is 73% of retailers say inaccurate inventory forecasting is a constant issue. Before updating your inventory numbers, perform quality check counts. Use an experienced team, do a post-audit follow-up while everyone is still on site and available. You do not replicate the complete second count, but perform some follow-up counts. These can be a combination of just random counts, follow up with maybe inexperienced teams, focus on historically problemed products or areas. And then it's also important to protect your data with backups. Save your backups of your counts in Excel format or any other spreadsheet format after you've got your count together. Having that information saved somewhere could be tremendously useful down the line if you need to make last second adjustments or corrections. I also recommend taking a backup of your POSIM database before you do a physical inventory or after the counting, but before you update any of the product information. Taking that backup of your POSIM database pretty much puts you in the clear. You can go through and update your reports and look at your inventory. And then if you realize that there's a problem and you're not sure how to fix it, you have a clean backup of the moment before you hit that button that you can just fall back to and then check that information again. Now, updating your final inventory counts in your point of sale system, there are different reports in the physical inventory tool in POSIM, and you'll want to become familiar with them as you're reconciling the products that you've counted against what your point of sale is reporting. So it's normal to see some variance in your count or some missing items, but by looking at what POSIM reports along with the count that you've taken, you can also identify items that were not counted or no longer in your store by looking at the items that are around them. POSIM gives you the tools to update the counts for these items accordingly. You could just see in the list the items that were scanned nearby, and then if there's an item that's unrecognized or missing, you could already know where you need to go to look for it. Okay, so thank you again so much for joining. We're going to leave the chat open for just a little bit longer here as we wrap up so that you can get any final questions asked. Thanks so much for joining us today. And if you have more detailed questions or would you like to talk to a member of our sales team or your client success manager, we can be reached at the numbers listed here or by email as well. Everyone have a great week. Bye.